All right, all right. Happy Monday, everybody. There's so much going on. I don't even know where to start. Let's dive right into it. So, listen, before I say anything, a political post. There's not supposed to be a red or a blue. Like my dad, rest his soul, used to say, the markets don't care if you're Republican or Democrat. They only care about one color, and that is green. So, let's jump into it, shall we? All right. So, as I was preparing this last night, I had a feeling that this morning was going to open up with something. So, even though all of the major indices, all stocks, bonds, everything is basically down today as a result of these tariffs, we are seeing maybe a glimmer of light that he says he's backed it out a little bit and given a 1 month reprieve to Mexico here. And he's supposed to be on the phone sometime today with Trudeau. So hopefully we can dial those things in. I know the idea is that, hey, we're gonna give you tariffs until you fix your borders, which in and of itself, on the top, looking down, it makes sense. But this, in my humble opinion, is not the way to do it. And let me show you why. So look, foreign trade deficits, meaning that if I give you more business than you give me, are not other countries ripping us off. Let me explain why. So, if and when you are watching this and you're an insurance professional, let's say, and you refer 5 or 10 deals a year to the home inspector guy that you know, but that home inspector guy only has the opportunity, the ability, the capability to refer back 1 or 2 deals a year back to you. It doesn't mean he's ripping you off. It just means that you guys are in different businesses and you have different abilities and different sweet spots. And that really is what tariffs and their deficits or otherwise is. So the US has a $55 billion deficit with Canada. We have a $157 billion deficit with Mexico, but it doesn't mean people are ripping us off. Tariff deficits are designed as a normal part of free market to be able to exchange things with one another. They're made so we can basically rest on each provider's sweet spots and be able to do that. The fact that we get 66% of our fruit and vegetables from Mexico, it doesn't mean that we are getting ripped off by them by the fact that all this vegetables and fruits is coming in. It just means that they can grow it better and more efficiently and cheaper because of who they are and where they are in the labor force that they have. That's all that this means. So Trump himself signed this 2020 trade agreement with Canada and Mexico, right, to promote the free trades. But anytime there's a new administration, anytime there's a new management that takes over a corporation, it behooves the corporation's shareholders, so in this case, us as people, to have the new management come in and do an audit and take a look at, hey, we were doing something 4 years ago. Are we still doing it again now? That's fine and dandy. But the trouble is, Trump has one negotiation style, and that's been learned over the last 50, 60 years of bonking people on the head in Manhattan over real estate deals. These are not real estate moguls that he's dealing with. These are not contractors he's dealing with or leases that he's dealing with. And so there's got to be a play here that enables us to be able to have some format of either a win-win and or the opportunity for it to be a win-win. It can't be a win-lose, so hopefully they're back at the drawing table now. Okay? So why is that important? Well, when free trade is restricted, here's what happens. Higher input costs, higher inflation costs, reduces the purchasing power of our families and what it is that we can get. I mean, you guys all know this already, and it slows down economic process. So really, the tariffs in this day and age, are they doing what they're supposed to? I don't know. Okay, so for those of you who are going to call me out on some of these things, love you. Love that you still have your political hat on, even though this is not meant to be political. I'd like you to please visit any of these websites. This is where I get my data from, and do your own research. And if I'm wrong, please point it out. Okay, let's get on to the market. Last few days, very, very flat. Last Monday, we had a good pickup, and since then, we've been very flat trading in this range. Not a whole lot has happened. We are still overbought here, which means that the market is looking at the news from this week to do either profit taking or rally. No one knows. Now, we were at 7.11 last week. We're at 7.05 this week. That's flat, 5 basis points. It's not anything significant at the end of the day. 7.37 nationally on jumbo, 7.33 today. Okay. By the way, If you're not following us on Instagram, please do so. This is where we're going to post short updates every single day to keep you in the know and keep you smarter than the guy you're sitting next to. What's happening today? We're going to absorb some of this tariff wars today and hopefully get some direction. Tomorrow, the JOLTS report, job opening labor turnover statistics report, is going to come out showing how many people job hopped. Very, very important Wednesday ADP employment report, which is the precursor to this BLS report down here. And then Thursday, we have initial jobless claims. What we're expecting at this point, ADP is supposed to come in at 150,000 job creations. And Friday's BLS, they're expecting 170,000. But again, if you're a regular viewer of this channel, you know what we feel about the BLS and their seasonal adjustments, etc. I won't bore you. Unemployment should be is expected to remain right at that 4.1. By the way, from all the pillars that hold up our economy, this is the biggest pillar right now that is still holding itself. Everything else, from our credit consumption, from our debt consumption, from our gross domestic product, from all of those things are showing a slowdown in the economy, which should help mortgage bonds and should help mortgage rates come down. This is the thing that's still pumping it up, and folks are out there still spending money. So it's anybody's guess as to where this is going to go. Stay tuned. All right. As always, like, comment, subscribe, share, do all those things that help us push this channel up and help you get smarter, and share this stuff with people that you care about so that way they can be in the know as well. Okay? If you want to nerd out, there's my phone number. Pick up the phone and call me. Otherwise, have a fantastic week. I'll see you all throughout the week on Instagram for updates. It's going to be a hot week, so you're going to want to tune in. Okay? Cheers.